This is Pre-Market Prep. I'm Brianna Valesky, sitting in for Joel Elcon, and I'm joined by Scott Redler. He's the Chief Strategist at T3 Live and T3 Trading Group. Scott, thanks for joining us. What are you seeing on this Monday morning?
Well, it's kind of good that we're getting a little bit of a quiet open, right? Some are like, why aren't we up, considering that the Shanghai is up another 3.3% and Asia was broadly higher. But, you think our markets are just a bit overbought. You have oscillators at plus 55. You had, what the biggest week in a while in most sectors here in the U.S. So I think a little digestion would be good. It's just a question of, is it pent-up digestion like last week where they didn't let the market pull in at all? Or do we get, a little bit of a shaking of the tree before maybe testing higher resistance?
So what's at the top of your radar this morning? What are you going to be looking out for today and the rest of this week?
Well, just real quick levels in the spiders first. You have Friday's low of 200.58. Friday's low. I think if, that probably gets tested maybe today or tomorrow. I think if we hold above 199.83, that's going to keep the bullish momentum in the overall S&P. Maybe it close below that, shakes things up a little bit and, you get more volatility. I'm going to be watching the IBDs because basically that sector didn't really bounce whatsoever last week. So the question is, does it play catch up this week, or does it become, a focus again for the bears to add some fuel? So if you look at the IBDs, you'll see there's like this lower pivot range, whereas if it gets above 311.50, which is a level I'm going to watch, and stays above it, maybe you get a long trade back towards that 323 where it failed last week, and that would get it out of the danger zone. But if it doesn't rally and the markets want to, trade off a bit, and if it starts getting below, just say 297, which was pretty much 2-week support, and closes below them, then I think that bears will point to it, and then who knows, it could create more volatility, and then you have that double bottom around 284, 285. So I think the bios will be interesting how they trade. And then, lastly, you have oil that had a huge 2-week move or a huge week move. That probably the oil needs need a bit of digestion. I know some guys probably tried, shorting those last week because they thought, too fast and too quick. I would say at this point, let's see how oil digests with those names to see whether or not it just was a short squeeze bounce, or if there's any more commitment to it to give the markets a bit more broad-based moves in the next few weeks.
Scott, we've got a question coming out of the chat for you. Do you believe it's time to buy commodity plays like oil companies?
I think that last week was maybe the time to buy it for a trade. Mm-hmm. If you missed last week, now you want to see, how they pull in. I do think that, oil itself, got the kitchen sink thrown at it in the course of the past month. Goldman said $20 3 different times, and then all of a sudden, oil broke above 45, 46, and the USOs broke above 15, 20, and now, they're north of 16. So I think that oil could grind even higher and see maybe 55. I think the USOs could see 1680 to 17. If you look at the XLE, which I put the chart out there a few times on Twitter in the past week or two, you had that huge engulfing move on that Friday, which was on October 2nd. And then you had the gap up on Monday, and then since then it's just grinded up. So at this point, I don't think you chase it, but if it were to pull back the XLEs, just say pull back to around 66 and hold it, I do think you could see 72 to 75 by year end in the XLE, and that would probably bode well for Chevron and Exxon and maybe Schlumberger and Halliburton. But if you buy today after one of the biggest weeks they've had in months, chances are if they do shake the tree a little bit, you're not going to be able to hold. So I'd rather see you wait and see how they digest and buy the dip versus after the big news that they just had their hugest gains.
Another question coming out of the chat. Won't crude stocks just follow crude?
Yeah, well, a lot of them did, right? Look at the move in oil,
Right.
Look at the move in the XLE, look at the move in the OAHs, look at the move in some of those names. So they have been, and oil, the first move is always fast and furious, and then the next move usually is a grind. So you had your first fast, furious move in a lot of these oil names, and now you want to see which ones hold up well to see if there's like another move attached. At this point, I would not say chase the XLEs here, around 70. I'd rather see a pullback towards 66, 67, which would be like, a third of the move that just came from, because the XLEs were below 60, in the end of September. So to be buying them here at 70, I think it's a little bit of a chase. And if they don't pull back, you'll get a high-level consolidation, and that'll make it easier for you to enter.
We got big banks earnings this week. A few of them you covered in the note. Let's get your thoughts on some of them that we're going to be seeing in the next couple of days. What about J.P. Morgan?
I think the buzzword is credit quality. What's their credit quality like during this earnings season? I don't think people are expecting too much. The sector has, been one of the most beaten down in the past few months because, now people think the Fed won't raise rates, and that means, less interest for them to charge, et cetera, et cetera. So, I think it'll be interesting to see what it does. I feel like it's not priced in for for a good report. If they come out and maybe if their trading was better because of the volatility in August and September, perhaps that would be helpful. I guess people are looking at some loan originations as well. For me, I'll see how it acts. If J.P. Morgan can get above like 63-ish, maybe there's some confidence that it could start reclaiming some of the moving averages a little bit north of 64. But overall, I just think that the banks are important this week, but they're not going to be the obsession of this earnings season because they're really not expected to have great reports, especially in the third quarter, which is usually a weaker time for them.
So what do you think will be the focus of this earnings season then? That's an interesting point you make.
I think guidance.
Okay.
A lot of people have set the bar lower. I think earnings are supposed to be like year over year, 5% lower, and that's never a good thing. The market's been driven on buybacks and basically over the course of the past year, and people are tired of that, so they want to see some kind of earnings growth, and because the multiple in the S&P is a little bit higher than the norm right now. So I think, how do they react after earnings? A lot of stocks, have, came out with earnings and then had down, like Yum came out and got crushed, okay, and the day after it bounced, and now it's people like taking it as a little bit of a, I guess, buy the dip mentality. And then you remember when DD came out with earnings, they weren't great at all, but it was so battered and bruised that it gapped up. So I think it's going to be like a very individual earnings season where you're going to have some stocks put in the penalty box and you're going to have some perform. And in my note, I put a little list of like high beta tech. And I know they were out of play last week, but you looked at the chart of Google and you looked at the chart of Amazon. Both those have really nice big bases. So it'll be interesting to see if their reports are enough for them to break out again. That would be good for the market or not. Facebook, I think, also has a really nice macro pattern. So, I think it'll be important this earnings season to see if names like that could actually break out and go. And then obviously Apple's going to be a huge watch because, it's underperformed the market recently, and people are a little concerned about the 6S because, every time you have like an S release, it's never as good as a new phone, so to speak. So I think that we need some leadership in this market if this move is going to be sustained overall versus just, trading these ranges. And right now we're getting back to the top end of the lower range with a little bit more room in the S&P closer to 2060.
Before we go into more individual names, someone in the chat is wondering, are you generally bullish on the market over the next 12 months?
Not really.
Okay.
I'm more, I'm bullish on ranges. I'm bullish on trading, two-way trading. I love to be when markets are trending. I love to be in a portfolio approach and, figuring out if I could hold multiple positions versus just trading 1 to 3 days. This last move was fast and furious, and typically that kind of move lends to a little bit of higher action. I think you're lost in two different time frames. Like last week I posted a chart on how the S&P can get up to about 2050 or 2060 this year. But then if you look at the weekly chart, you could still have a head and shoulders top type pattern where this bounce back is forming a right shoulder in what could be a pretty ugly pattern, moving forward into next year. And if, earnings continue to go lower and this is only a bounce overseas and oil, hits 55 and then heads back down like Goldman says, next year it could be, a tough sledding for stocks. But for now, seasonality comes into play. You have mutual funds ending the year October 31st. In November, buybacks start happening again. So if all of a sudden markets are still around here, you're going to get some buy pressure. But then, next year we'll have to reevaluate what's going on. And at this point, you could be like short-term bullish for a little bit of a continuation, but then a more, intermediate cautious when we enter next year, especially after the new money gets put to work.
Let's talk about a few more of those high beta tech names. Something like Netflix. We are going to see their earnings report later this week. What are you looking for in Netflix?
Netflix has been, one of the best in breed chosen ones. Last week you saw a really nice igniting bar, when they announced that they're going to raise prices. It's above moving averages. It's set up for a good report. I'm not going to take an options play into it. I'll just see how they report and how it responds. I think anything above 118 and boom, there's some shorts in there. I can go right back to highs. But how many times can Netflix do that? Where it bases and bases, and then boom, you get the gap up after earnings. So that's the type of name that has to deliver, and just be and crush the numbers for it to go to all-time highs, because that's priced for perfection. I guess it's the same way Google and Amazon. All three of those have the best looking charts, the most optimistic type patterns. So they're not priced for disappointment. They're priced for growth. So we'll have to see if Netflix delivers, and that could set the tone for some of the high beta trading moving forward the week after.
Yeah, absolutely. I think next week we're going to see earnings report from Google and just a bit of a 2 week outlook. What are you looking for in Google?
Google is also set up for a big move. You had a base since last earnings. It came out with earnings, exploded to the upside, hit 700, and now for the past 3 months, it's been under accumulation. It's above all moving averages. I think institutions are still positioning and accumulating here. So if it's viable, hopefully I'm hoping there's a viable move before earnings. Like maybe if it clears 680, there's a trade back to 700 before earnings. So you don't have to have the earnings risk. So I'd love to see a little pre-earnings run in Google. If that's the case, it's going to have to clear 680 with authority. And if just say Amazon does a pre-earnings run, that's going to have to clear 550. Both these stocks did pre-earnings runs right before. So I'm hoping that's the case. So this way you don't have to sit through the earnings report or do some type of option play, because, you don't want to be in the name into earnings just in case there's a blowout.
Just a minute or so left with you here, Scott. I like that you mentioned Alibaba in your morning note, because we were also talking about that, and Barron's coming out with that article saying Baba could drop another 50%, but it seems like, since the mid to end of September, it's been kind of on its way up.
The writers of Barron's are great and all, but sometimes they're just a contrarian indicator.
Yeah.
The stock was so battered and bruised, and that igniting bar that came out on October 2nd, if you look at that bar, that was the bar that said Alibaba's at least back in the game. I remember when I put I was bullish on Facebook back at 25, and they came out with an article saying 15,
Yep.
and I got hate mail for about a
Yep.
week. And then that was right before they monetized search, gapped up above 30 and never looked back. So at this point, Baba just had a big move off the lows. I would think that it needs to, hold 65 the same way Twitter. I think Twitter's back in the game, and I'm actually focused on Twitter today to see
Really?
how it handles the layoffs. They announced layoffs. I read the article.
Yep.
Not too many. I think Dorsey's coming in there and showing how he's going to be in the nuts and bolts of the business. He's going to trim some fat, and I think that Twitter is now viable on dips. And I'd love to see it hold 29. I think there's a chance that it goes green today. If it goes green today, there are a lot of people that that sold it after hours on Friday and got short. So I think that it's worth looking at today.
We've been on the line with Scott Redler. He's the chief strategist at T3 Live and T3 Trading Group. Scott, as always, thank you so much for joining us. We really appreciate your insight, and we will have you back next Monday.
Sounds great. Thanks for having me. Good luck.
Thank you.